Good afternoon, everyone. This is Christian with PerfectStockAlert.com, a 100% free service for smart investors and traders. All we ask in return, please refer a friend. Today is Tuesday. It's May 29th, 2012. We're looking at Toronto Stock Exchange, the TSX today. A couple of things you can learn about this chart, learn from this chart, and actually apply to other charts out there as well. So keep an open mind here. If you're not trading the Toronto Stock Exchange, this would apply to other markets as well, as we're seeing a lot of the same signals. Looking at the Toronto Stock Exchange, you can see a couple different things. First off, you can't see it anymore. We talked about this back when it happened. You had this formation here going on, actually further back that way. You're forming a head and shoulders formation. We talked about this being the neckline. When you close below that, that's what you were confirming, that head and shoulders pattern. And that head and shoulders pattern is a major market top. That's what we've seen on this particular chart. We've seen it on several others, including those in the U.S. So when you get this major market top in play, that's an important zone, important area to look at the chart and say, okay, we have a strong resistance there. We have a major peak in formation there. Then you get some sideways moving activity going on for a little bit, kind of holding this little support line here and here. It moves up here, pulls back down, finally gets a break below these support lines. When you break below that, you will get a test of that previous support to see if it's now acting as resistance. You get this move to the upside here, and you get a shooting star formation right there, showing that there is in fact resistance where we expect to see it. It's actually slanted. It shouldn't be. Let me clean that up and try that again. All right, right here. Let's see, is that right? Just about. Okay, there you go. So you get this little shooting star formation right there, right here as well. Both of these are indicating that there is sell pressure there, there is resistance there. Well, now that we're moving up there again, we talked about this last Friday. We told you we didn't actually see a trade on this particular day, so we didn't see a shooting star formation, something we can get a really good signal, a really good entry opportunity on. Today's activity, however, gives us that signal. It shows us what we expect to see, more sell pressure here, and you'll notice it is now also lower than we saw it before here. That means sell pressure is getting stronger, buy pressure is getting weaker. That's why you're getting lower lows and lower highs. All of these signs are telling us this is something we want to look for, an opportunity to get short. On top of that, we also have the benefit of the bearish divergence setup. And the divergence situation basically tells you when there's something going on that's non-sustainable. You can have them as bullish or bearish, just depends on the particular type. If you've been to our free website at PerfectStockAlert.com, you know we've got tons of videos there, teach you all the different techniques we're talking about here, and they're in video format for you to check out. And right now we're showing a bearish one. We see this ultimate oscillator indicating the momentum, high point here, higher high here, shows it's trending up. However, price activity is not got the same slope to it. It's sloping down. We're losing the highest close of this point and the highest close of this point, same corresponding time period. You can see that we're sloping down here. This is not a bullish situation. It's a bearish situation telling you that this rally to the upside is not going to be sustainable. So all we want to do when we have a divergent situation like this, we want to be looking for the peak. That's all we have to do. You don't guess when it's going to happen. You sit there, watch it, and look for it. In this situation, we're giving you a signal here, which whenever you see a black arrow, it simply means if the next day makes a lower low and a lower high than the previous day, then you start shorting it. So you can use that for tomorrow if you see a lower low than you saw today. Today's low was 11,572.49. So if you get 1 cent below that, you can actually start shorting that right there with a stop 1 cent above today's high. That would be your little trading range right here, will be where you'll be shorting at. This would be the test of the low that you would expect to be taken out, being that the low point isn't actually a true bottom. You've got a low point here. There's no hammer candlestick formation, nothing indicating the buy pressure. Reverse this thing. So basically what you're seeing here is an opportunity to take a short opportunity if tomorrow's day was a little bit lower than today's low. Other than that, just keep watching the markets. These bearish divergence formations, these bearish setup formations are all going to be erased in time, but you can't actually tell exactly which day it's going to happen. Not in all cases can you do that. So just keep an open mind, but remember, do not be a buyer of these markets in any way, shape, or form. If you've not been to our free website at PerfectStockAlert.com, it's right there. It's 100% free, and all we ask in return, please refer a friend. God bless, take care, and I'll see you all in tomorrow's video. Please take a moment to review our disclaimer. The information provided herein is our opinion only. Under no circumstances do any statements here represent a recommendation to buy or sell securities or make any kind of an investment. You are responsible for your own due diligence. To summarize, we do not provide investment advice, nor do we make any claims or promises that any information here will lead to a profit, loss, or any other result. These videos are for educational purposes only.